my perspective, the main beneficiary of the movement out of the dollar is not the euro, though the euro's gone up, about 10% this year against the dollar, but gold is up about 28% against the dollar. And so gold is up quite a bit against the euro as well. So I think the real movement is not out of dollars into euros. It's out of dollars and maybe out of euros too into gold. So that is what foreign central banks are buying when they're selling their dollars, and again, maybe some euros too. So I don't see the euro becoming the next reserve currency. But knocking the dollar off that throne could be helpful to Europe in the short run.
The calm before the storm never feels like danger. It feels like normal. That's what makes the next financial crisis so dangerous. Peter Schiff believes the coming collapse won't look anything like 2008. It will be far worse. The last crash was rooted in bad mortgages and reckless lending. Painful but containable. This time, Schiff argues, the core problem is the foundation itself, U.S. government debt and the dollar. The same policies that blew up the housing bubble, easy money, endless bailouts, and runaway spending didn't go away. They became permanent. Now the system is bigger, weaker, and more dependent on debt than ever. Europe, he says, isn't healthy either, but it's not as fragile as America. The euro has flaws, but Europe doesn't run the outsized trade deficits the U.S. does. Washington has abused the dollar's reserve status for decades, and the cost of that abuse is coming due. That's why central banks are making their move. They're not simply rotating from dollars into euros, they're loading up on gold. And the price action shows it. Gold is outperforming against both currencies. For Schiff, that's the clearest sign of where real safety lies. If the dollar loses credibility, the U.S. government won't be able to rescue anyone. Treasury bonds won't function as the safe asset they once were. Printing money would only add fuel to inflation and accelerate panic. The only possible path out would be brutal: slashing spending, allowing interest rates to spike, and accepting massive losses across stocks, real estate, bonds, and banks. If you found value in this breakdown, please hit the like button, subscribe, and share it with other investors who are paying attention. We're here to keep bringing you sharp analysis and voices that actually understand what's unfolding. Thanks for watching.
Well, first of all, we haven't even had this crisis yet, but when we do, it's going to be much worse than 2008. But yes, it is all a continuation of the same failed economic policies, monetary policies, fiscal policies that led to 2008, right? In fact, the current policy mix, the mistakes that are being made, are even greater than the mistakes that were made that led to that crisis. So the next crisis is going to be much worse, because I think it's not going to be just centered, in the mortgage market, right? This is going to be a sovereign debt crisis where it's U.S. Treasury bonds, right, that are at the center of the crisis, and the U.S. dollar. So it's not just a financial crisis. It's a U.S. dollar and sovereign debt crisis. And that has much more profound implications for the economy, for the financial markets, and it also takes off the table a government bailout. The way they were able to mitigate the crisis in 2008 was the government stepped up to bail everybody out, right? But if it's the government that is in crisis, if the government's debt is now suspect and nobody wants to own it, if the dollar is collapsing, the government can't bail out anybody, because the government can't bail out itself, right? If no one wants dollars, then what good are printing more dollars? No good. It just throws gasoline on the fire. So this is going to be a much worse crisis, and there are no bailouts, right? The only thing the government could do is to act responsibly, which is to cut spending and allow interest rates to go up, right? And so doing that means we get a stock market crash, a real estate crash, a bond crash, bank failures. We still get the financial crisis, only much worse than 2008, and no bailouts. So everybody loses, right? And so what we're staring at is far worse than anything that we've experienced in the past. I don't think Europe as a whole is in a worse position than the United States, but that doesn't mean they're in a good position. It's just not as bad. I do see a lot of problems in Europe. with excess amount of debt, too large a welfare state and governments having overpromised as to what they're capable of delivering to citizens in the way of government programs, especially, pensions and healthcare and all the other commitments that have been made that the governments are unable to meet, right? So there is a problem there. Europe is not going to be immune from the inflation that Americans are going to endure. But I just think that the U.S. problem is more severe right now and may be the one that erupts first because we are running these huge trade deficits. Europe is not. I mean, Europe, overall, their trade is in balance with the rest of the world. So they have not been living beyond their means to the same degree that Americans have. The euro has not provided the crutch that the dollar has provided to Americans. So, I think that we're uniquely positioned to suffer from a realignment. And to the extent that the euro ends up supplanting the dollar in any meaningful way, that may extend the time that Europe, can postpone its day of reckoning. But from my perspective, the main beneficiary of the movement out of the dollar is not the euro, though the euro's gone up, about 10% this year against the dollar. But gold is up about 28% against the dollar. And so gold is up quite a bit against the euro as well. So I think the real movement is not out of dollars into euros. It's out of dollars and maybe out of euros too into gold. So that is what foreign central banks are buying when they're selling their dollars. And again, maybe some euros too. So I don't see the euro becoming the next reserve currency, but knocking the dollar off that throne could be helpful to Europe in the short run. I mean, I think the biggest winners in our trade war are going to be the emerging markets. I think, again, freeing them of the responsibility of supplying the U.S. with goods and loaning it money, I think is going to be a huge tailwind for their economies and their standards of living. I think the world is going to benefit from the end of this relationship because I think it hasn't been symbiotic. I think it's been more parasitic. I think we've lived off the productivity of the rest of the world. And I think without having to support us, I think that just means the rest of the world has a lot more. And if you look at the emerging markets, these are, better, younger demographics. You don't have these older populations that are dependent on government money that it doesn't have. You have people that have, higher savings rates that are more self-reliant, are the rugged individuals that America used to have that are not looking to government for a handout. They're just looking to create their own opportunities and hoping that the government stays out of their way. And so I'm very optimistic about a lot of these countries in Southeast Asia and other parts of the world too that will benefit from this. Some of the countries that we're hitting with the highest tariffs are the ones that are going to have the most to gain.
The notion that the Federal Reserve is independent has always been more myth than reality. Peter Schiff argues the Fed has functioned for decades as an enabler of reckless government spending, financing deficits with artificially low interest rates and money creation. Independence was never absolute, but at least there was the appearance of separation between political power and monetary policy. Schiff warns that what Trump is attempting now risks erasing even that thin line. He points to the controversy around Fed Governor Lisa Cook. Schiff doesn't agree with her views. Like most Fed officials, she underestimated inflation and pushed for overly loose policy, but he says the way Trump is moving against her is dangerous. Removing a Fed governor over policy disagreements crosses a line. If Biden had tried something similar, Schiff argues, Republicans would be howling about overreach. Because it's Trump, many of those same voices stay silent. That double standard undermines the rule of law. The larger concern is what happens if Trump succeeds in reshaping the Fed with loyalists. Schiff says the outcome is predictable: lower rates, more money printing, and a doubling down on the very policies that created today's debt and inflation problems. Far from fixing the Fed's failures, Politicizing it even further would set the stage for bigger mistakes. In Schiff's view, this isn't just about one official. It's about whether the Fed becomes nothing more than a political tool, with the costs falling on the entire economy. Let's get back to the interview.
Yeah, well, first of all, I've always talked about Fed independence being more of a pretense anyway. I think that the Fed has not acted independently in the past and has been way too cooperative and complicit in enabling excess government spending, particularly deficit spending. So I think the independence has been more in name only, but at least there's a pretense there, and to some degree, the Fed has a limited independence, not as much as it should, but at least there's something there. But what Trump is doing is tearing apart even that pretense. Look, it certainly looks like Cook technically committed mortgage fraud by listing her second home as a primary residence. I mean, it is something that is widespread in this country. Millions and millions of people have done it. Not that I'm justifying it, just because so many people have done it. But it is not like a major mortgage fraud. It's something that, if it's discovered, is rarely, if ever, prosecuted, that somebody did that. I mean, maybe the bank would say, hey, you got to pay back the mortgage, or something like that. But I don't even think they could probably find an incident where there's somebody who went to jail for doing this. Once upon a time in America, we had something called liar's loans. And the reason they called it a liar's loan is because everybody knew that the applicants were lying. And so they looked the other way. These were mortgages. So if they actually have a liar's loan where you're allowed to lie by definition, and it's the same thing. So look, I don't even know. Maybe she has an explanation for this, but there's no way a president can simply use this as a pretense to fire her, because it's obvious he wants to fire her because she voted not to cut rates. He's looking to remove FOMC members so he can install a lackey. And so he's digging up dirt. And so you have to look at the motivation for this. The real reason he wants her off the FOMC is because of her policy choices. If she was one of the few who voted to cut rates, there's no way this would have even happened. So forgetting about what she did, it's the substance of why it's being brought up. But, if this is the case, okay, there's mortgage fraud here, let somebody file charges. Nobody's filed any charges against her. And let's see if they can get a conviction. She's got a 14-year term. She's only a couple of years into it. Plenty of time to get a jury to convict her. Maybe if she's actually convicted of the crime, you could argue that, well, she's a convicted felon. She has to step down, right? I mean, maybe. But just to accuse somebody, I mean, maybe she's got an explanation. Who the hell knows? But in America, you're innocent until proven guilty. And when you have a 14-year employment contract, which she has, you just can't be fired. If, she was an at-will employee, sure, maybe you did something wrong, gonna fire you. Okay, that's your right. But when you have a contract, especially, here at the Fed, those 14-year terms are there for a reason. It's to insulate them from political pressure, right? So they can remain independent. But if all you need to do is a president just digs up some dirt and then makes an accusation, and then he can just fire you, then, whatever, pretense of independence is completely lost. So I disagree with what Trump is doing. I think the courts will probably rule that he can't do it because it's pretty obvious that he can't do it. It's unfortunate that more Republicans don't speak out, because I'm sure if Biden were doing the firing, they would all be up in arms. Truth is truth. It can't be dependent on who's doing it, right? So you can't support it if a Republican does it, but then condemn it if a Democrat does it. That's hypocrisy. You have to be consistent in the law. And again, I'm the biggest Fed critic out there, but I would defend the Fed governors against such an action. And, I mean, personally, I think all the Fed members, should be fired for not hiking rates, right? But, you can't do that. But I think, they're complicit in these massive deficits and they've been too easy for too long. Rates are too low. They never should have done quantitative easing. They've made all kinds of mistakes. But I think they'll make even bigger mistakes if Trump succeeds in stacking the FOMC with his puppets and then, gets them to slash rates and start running the printing presses. That's what he wants them to do. If Trump was concerned about preserving the dollar's role as the reserve currency, he would have vetoed the big, beautiful bill because that is a threat to that role. What we need to stabilize the dollar is to get rid of the deficit spending. And so we need substantial cuts to government spending right now. We need to show the world that we are serious about the fiscal position of the United States and our ability to make good on our debts with dollars that maintain their purchasing power. But Trump is basically telling the world, we don't care about the dollar's purchasing power. We're going to create massive inflation to artificially stimulate the economy, and we want the rest of the world to just suck it up and eat the loss. We want the world to hold dollars, even though those dollars are going to lose a lot of value while you're holding them. Why should the world sign up for that? Why should the world agree to accept those losses? So everything Trump is actually doing is undermining the dollar's role as a reserve currency, not supporting it.
What's unfolding points to a structural fragility that can no longer be ignored. The idea that the monetary system could keep expanding on cheap credit and endless rescues without consequence was always unsustainable. Now the strain is visible not only in America's swollen deficits but also in the credibility of its institutions. Political pressure on the central bank, ballooning obligations, and eroding faith in the dollar are converging into a moment of reckoning. Gold's renewed strength isn't just a market quirk, it reflects a deep shift in where confidence resides. If history is any guide, once trust is broken, rebuilding it is nearly impossible. The decisions made in the coming years will determine whether the financial order bends or breaks, and whether the next downturn is survivable or catastrophic. Could this be the turning point where global markets finally abandon the dollar's dominance, forcing a reset of the financial system itself? So stay tuned. If you're into real, data-backed takes on the financial system, hit like and subscribe so you don't miss the weekly updates. Thank you for the support, and I hope you enjoy the video.